And the strengthening job market is one of the reasons why the Federal Reserve raised interest rates at its meeting last month. But instead of going higher, key interest rates have fallen. And that's creating a disconnect between the Fed and the market. Steve Liesman takes a look at which side may blink first.
Markets have been telling the Fed they were wrong about inflation, the economy, and hiking rates. And with a 1,000-point drop in the Dow, they were practically screaming it. The Fed may finally be hearing it. St. Louis Fed President Jim Bullard became the third Fed official in 2 days to hint the Fed may be less aggressive in raising interest rates this year. Quote, "I'm starting to wonder if my story is the right one," Bullard said about his forecast that oil would stop dropping and inflation would pick up this year. Bullard now says the oil decline is substantial and could mean a slower rebound in inflation than he forecast, and that could mean fewer rate hikes. Other Fed officials in recent days have said risks to the U.S. are rising due to weakness in key economies like China. It's making the market believe the Fed's forecast for 4 rate hikes is looking at best like a long shot.
The Fed is reacting to a couple of things. One, the drop in oil, the drop in import prices, putting more downward pressure on realized inflation. The drop in inflation expectations that are now back down to the lows we saw in September. And finally, they're reacting to the volatility we're seeing overseas, the uncertainty about China. All of that adds up, to my mind, to a lower chance of a March hike and probably a fewer number of rate rises than they were suggesting at the end of 2015.
Since the rate hike, markets and the Fed have been out of sync. For example, the 10-year note, a key interest rate for the economy on which mortgages are based, has fallen enough to remove a big part of the Fed's quarter-point hike. Of course, a reversal in oil prices and stabilizing world economies could put rate hikes back on the table. But for now, in the debate between markets and the Fed, score 1 for the markets, even though it had to scream to make its point. For Nightly Business Report, I'm Steve Liesman.